Hello folks, and welcome to our weekly forecast presented to you by Shadi Abdo. So first things first, there is a very important piece of information that's going to be I think going to be the pivotal case that is going to move the market very sharply, maybe in the next weeks or something like this in the next weeks. So investors are re-evaluating expectations for monetary policy. In recent months, there was a growing expectation that central banks will soon start to loosen monetary policy, especially given that inflation has receded more quickly than anticipated. Yet in recent days, expectations have begun to shift. First, there is a view that although inflation has come down sharply, it is getting stuck at a level that remains too high. I think this is around 3.2 or 3.4 some percent or something like this, but it does not go lower than this level, which is would simply draw our attention one way or the other. This has to do in part with the tight labor market, if I can call it this way, with the continued tightness in labor markets in the United States and Europe. Second, economies have shown greater resilience than expected, especially in the US, which bodes poorly for further reductions in inflation. Finally, central banks leaders have gone out of their way to quell expectations of imminent monetary policy easing. For these reasons, I believe that many investors are starting to have second thoughts about the future direction of interest rates, which is a very, very important thing. Now, people, instead of thinking about lowering or cutting interest rates, they would be thinking about they would stop raising, and maybe they would think twice about cutting interest rates at this time. Many governors, Fed governors, are talking about this idea that it's very, very early to be cutting interest rates these days. So now we're gonna move to the charts and see what we have, the most important, I think, levels or maybe opportunities that we can find on the charts. So here's the EURUSD. In response to this very important piece of information, as I mentioned earlier, I would simply be thinking about who is going to be the first one to cut interest rate. Now, the first one to cut interest rate would simply lose value. So if we're talking about the US, then in this case you're going to find that the EURUSD is gaining value, too much value against the American dollar, the euro I mean. So in this case, I believe there is room for the pair to simply continue going downwards, maybe to reach 1.0720, something like this. And from this very area, I believe there is going to be a pull back to the upside. This would simply do with the fact that the market would wait a little bit until the view is clear. So this is simply how it works. But as for me, from a very technical point of view, I would say, based on what we can see on the chart right now, that the pair is trading below 1.0911, which is a strong level of resistance. The price might go downwards. As you can see here, there was a retest to this broken level, the border. I would say this uptrend line. Okay, we have a bullish channel here, and the price could break through it, and there was a retest. Let me zoom in a little bit so you can see everything in a clear way. So as you can see here, a retest, then the price goes downwards. So just like this, the price might continue based on these breakouts. Based on this retest, the price might continue going downwards. to reach 1.0720 as I told you before, and this is going to be conditioned by the continuation of trading below the broken level that is this uptrend line. It was a support level. Now there's something that's called the rollover, that when a certain level is broken, it turns into the opposite. So instead of having a support level, now it acts as a strong resistance level that might prevent the price from going upwards. So let's move to GBPJPY. It's just moving sideways. It could be clearly seen. There's a balance in the market. So the market, I think, might reach 1.26, to be specific, 1.2611, something like this, and from there the market might react in a bullish way. Then it might target the other side, that is 1.28, where we can find some sellers actually. The dominators of the market at 1.28, sellers for sure. So as we can see here, 1.27, that acts as a strong support level. So if this level actually is broken, we would change our scenario that the pair might continue going downwards. Other than this, the price might go upwards if this level 1.2611 remains solid. That's it for the GBPUSD. Let's move to gold. I think gold is trading in a bearish channel, as we can see on this chart. So it's actually in an area where we can't really decide whether we can enter the market or not. We just want to wait until the price reaches maybe the upside of this bearish channel, and then maybe there could be like a good opportunity where we can go short, because as you can see how many touches we can see on this level 20, I think, yes, 2038. If the price reaches this level and shows a bearish evidence below it, I think there's going to be like this would produce a sell signal. This is going to be very, very important. So we're just gonna wait. Nothing to do here. So let's move to the Australian dollar. I believe there's a potential that a pair could be forming. I mean, just imagine how how things would work. In this very case, I believe we have a potential that the price could be forming a head and shoulders pattern. So in this very case, I believe the price perhaps the price might continue going upwards to reach 0.6690, and from there the price might react in a bearish way. Why? Because I think here it's gonna be like, maybe it could be like the second shoulder. Here we have the first, and here's the head, and here's the second shoulder, and here's the neckline, that is 0.6524. Numbers are very small, so I'm not getting it, but anyways, if the price goes upwards, I'll just be focusing on this very area, 0.6690. If it shows a bearish evidence below it, I would be thinking about going short, nothing more than this, with a very tight stop loss that goes above 0.6690. On the other hand, if the price does change its mind and breaks through the level of 0.6524, then in this case the price might continue going downwards to reach, I think this is gonna target, I think 0.64, maybe 0.6450, and then 15. Okay, so two levels to be our targets, but this is gonna be conditioned by a very important thing, the breakout of 0.6524, and the breakout must be confirmed. So we don't have like a false breakout that might deceive us. Many traders would be deceived by the fact that they would just enter the market after a shadow or something like this, or a wick. So if the market goes just below this level, with no confirmation, with no close, the price does not close below this level, then they would enter the market. But this is like a very bad thing, because they would lose money at this very case, because this would eventually be turned into some false, I would call false breakouts. So yes, this is how it works. Let's move to GBPJPY on the daily time frame. It is simply trading here in a very critical area, just below the level of 188.30. 188.30 is a very important level to just keep in mind. So maybe for a margin of error, I would go a little bit higher to draw this line 188.87. So we have here an area rather than a very specific level. I would simply be drawing these levels as an area. Why? Because the market is not very accurate when it comes to a specific level. It doesn't go this way actually. So I think we could be bearish as long as the pair is trading below 188.90 with targets to the downside, so the pair might continue going downwards, I think towards the level of 185.50 and 184.490 gonna be our targets. So that's it. I hope that you have enjoyed this video, and that's it. Thanks for watching and have a wonderful day.